Okay, welcome back. We've seen another leg up. So in the last, 20 minutes or so, we've seen a move which is about 120, 130 odd points. That sharp up move that we have on our screen, 17,181 is the index level at this point in time. Let me just take a look at what the day high was. That's 17,213. Yes. So not very far away, 17,185. Now, the Union Health Secretary has written to the state of Maharashtra asking them to align SOPs for international travellers with central government guidelines. This is, of course, an area of huge interest and for travellers all over. Timsy is here. She's picking up the details. Timsy, tell us more.
Well, if you see the letter that Rajesh Bhushan, Union Health Secretary, has written to Additional Chief Secretary Dr. Pradeep Kumar Vyas of the Government of Maharashtra, he is very clearly saying that this is with reference to the Government of Maharashtra's order putting in restrictions in place for international travellers. And these restrictions, according to Union Health Secretary, is in divergence with the SOPs and guidelines issued by Ministry of Health and Family Welfare, Government of India. And this is what I would say that he's written, quote unquote. And I would quote here, he said, I would therefore urge you to align the orders issued by the state with the guidelines issued by the Health Ministry so that uniform implementation of guidelines may be ensured across all states and union territories to avoid any inconvenience to travelers. So very clearly a strict message going in from central government to Maharashtra government talking about the restrictions that they have put in for international travelers, especially the mandatory RT-PCR testing for all international travelers at Mumbai airport, irrespective of the country of the origin. Secondly, mandatory 14-day home quarantine for all international passengers, despite being tested RT-PCR negative upon arrival. Again, another restriction which is very closely being monitored by central government is mandatory RT-PCR test for passengers planning to undertake connecting flights after disembarking at Mumbai and further traveling subject to a negative RT-PCR report. Also, requirement of negative RT-PCR test 48 hours prior is something that they do not agree with. So let's see how soon Maharashtra government takes cognizance of this letter, whether they actually rework their guidelines or restrictions, to be precise, as Union Health Secretary says. We'll have to wait and watch.
All right, we'll keep coming back to you, Timsy. Thanks so much for joining and giving us that quick update. But focusing back on the markets, then NMDC, well, that one's higher in trade, despite the fact that overnight they went ahead and they confirmed that, yes, they've gone ahead and cut prices. So on lumps, the price cut is to the tune of close to around 750 rupees odd, while on fines, it's close to around 200 rupees. Now, if you're looking at the cuts, well, on lumps itself, it's a little higher than expected, while on fines, it's a little lower than expected. And remember, their sales mix is close to around 70% is fines, while 30% is lumps or thereabouts. So the street was bracing for a far higher cut in terms of fines prices. And the key reasons are the global iron ore prices have been dipping because steel production on the whole has been dipping. The other factors, demand on ground as well, particularly from secondary steel producers, has been quite tepid. And in the last auction that NMDC did take place in Chhattisgarh, well, demand was a little bit weak and the auction wasn't that great. So on the back of these factors, that price cut came about. But has it come as a surprise? I don't really think so, because sponge iron prices had corrected. Pellet prices as well are down by nearly around 14-15% in the international market. In domestic market, by the way, they're down by more than 25%. So given that sort of a backdrop, you're expecting iron ore prices to see a bit of a cut. Now, if we look at it, well, the stock is corrected close to around 35% from the recent peak. And that could be one reason why we're seeing a bit of a bounce today. The stock is up 3.5%. Well, what's supporting the stock? One is hopes in terms of a rebound in construction. That will spur steel production, which in turn will spur iron ore demand. Second factor is demerge of the steel plant. It should come in the next couple of months or so, which will unlock value out there. And the third factor is valuations. It trades at around 3.5 times its forward EBITDA. So on an EV upon EBITDA basis, at around 3.5 times odd. Prakash, what do you make of NMDC? It was at around 210 rupees not too long ago, I think around 3 months or so ago. It's come down to 135 rupees, and as I mentioned, a couple of triggers as well, that are there. How would you approach the stock from here?
No, so Nigel, I definitely echo your sentiment, given the fact that this is such a strong franchise, and at 40,000 crore market cap, you get a company that's been in that 5 to 6% dividend yield band, is available at a forward multiple, which is absolutely not compelling. And there is no reason why the steel cycle will not probably stabilize at closer to these levels. Optically, it looks like things have come off, but then we were in a very exuberant peak of sorts very recently, right? So I think the lack of this thing ability to price themselves is not something which is only endemic to NMDC. It's an industry-wide phenomena. They will make up with volumes as things pick up, even if the pricing is a bit soft on the lumps. My whole this thing is that NMDC is something that you buy not for just a quarter or two. It's more from a longer term story. And those two new units, once those gets some news flow starts around that, I think the market will get excited about the prospects of how that's going to integrate into the company's overall business. So definitely it's a buy. There's no doubt about it. I would be surprised if even that 216 52-week high that you mentioned could probably be challenged sometime soon in the next couple of quarters. So you definitely have a decent upside and a very little downside in terms of what could go wrong with the stock from these levels.
Prakash, we'll leave it there today. Thanks a lot for joining us. Good talking to you. I don't know if we are missing some news on Idea because it's now at 15% freeze. It was at 10% freeze. That freeze opened and immediately there's that, it's an FNO stock, so there's no circuit, but FNO stocks now have temporary freezes. So after 10%, it's 15%, then 20%. I'm not saying that it will go to 20, but that's how things move. So it's at 15% freeze right now. But let's see, there are a couple of wire agency news, but I don't want to speculate too much, so we'll wait for some confirmation.
And Anuj, I think if Idea is going to survive, then Indus Stars should be the other stock that you're looking at. And that one as well has come from the low point of the day, provided there is some relief that's coming in from Vodafone Idea. And that's why, in fact, I think from the low point of the day, Indus Stars as well, they normally move in tandem. If Idea is going to survive, then maybe, in fact, you normally see a bit of a move out here. But we have no confirmation in terms of news. For the time being, just spotting both these two stocks.
Absolutely. So, this is a bit of a trade which plays out, program trade, but we need to wait if there's any news or not. But for now, Idea is frozen at 15% upper circuit. Time now to welcome our Alpha Manager, Anshul Sehgal, Head and Executive Vice President of Kotak PMS, is joining us. Anshul, hi, good afternoon. Telecom stocks first, since we are discussing, telecom right now. They've had a good run of late. Your thoughts?
Afternoon, Anuj. Thanks for having me over. Regarding the telecom space as a whole, this is a space which has seen over a 10-year consolidation phase in terms of prices. And then, we saw ARPUs peaking out sometime in 2016-17, from where ARPUs halved. And from that level, ARPUs have gone up, say, about 50%. And even if we align this number to inflation, there is a significant downtick versus what ARPUs used to be at about 200 rupees in 2016-17. In that context, there is room for ARPUs to move up much more from here. In fact, we're at, say, 150, 160, around that level. And this number, if we were to adjust it to inflation, could